There is a certain food chain in the business which consists of several levels, links. There are people working for someone at the bottom. They are highly dependent on what happens at the top. They see only their work, make a little bit of money and get very tired. Investors are at the top of this chain. It is the level that you should achieve. What is investment? Investment is the capital that's in any projects, companies, events, real estate or securities in order to obtain a significant increase in invested funds. Why should you invest? Firstly, you can earn passive income. If you regularly save and invest your money, you can create capital that will bring a lot of passive income. Secondly, this way can help you save up for a large purchase. Equity can help you earn money for education, travel, a house, a car and so on. Thirdly, investments can provide a comfortable and carefree life in retirement. Take care of your future today with the help of long-term investments in order not to change your usual way of life in old age, not to deny yourself something and not to think about tomorrow. Fourthly, investment is safety. You are sure that you have an airbag of invested money that is growing. But investing is not just about making money. Competent investments in different currencies can protect you from the fact that a crisis will occur in your country. If you have cash in such a situation, you will lose it. But if your money are invested, for example, in foreign companies, you are more protected, since you have invested in the economy of another country. Best investments. 1. Real estate. Pros. It is the easiest form of investments. There is a minimal risk that investments will depreciate. Cons. An investment in an apartment pays off for a long time. It takes up to 20 years, according to various estimates, with a rental yield of only about 4–5%. The apartment cannot be sold quickly. 2. Currency. Pros. It is very simple and clear way. Currency can be kept on deposit and receive interest, and when the price rises, sell it. Cons. Exchange rates are unpredictable. Those who bought dollars at 80 rubles and euros at 90 rubles at the end of 2014 are still in the red. In addition, foreign currency deposits have very low rates. 3. Contributions. Pros. Profitability is guaranteed. This is the most convenient and safest way to invest money. Cons. The return on deposits, as a rule, does not exceed inflation. 4. Investments in securities. Pros. The possible yield of securities is higher than that of deposits. There are a wide range of instruments, from low risk with moderate returns to high risk with possible high returns. Cons. Profitability is not guaranteed. You can go into the red, especially if you invest in high-risk securities. 5. Series I bonds. The US Treasury issues savings bonds for individual investors. Pros. This bond helps protect itself from inflation. The base interest rate is paid and then interest is added based on the rate of inflation. As a result, if inflation rises, payments rise too. Cons. But there is an opposite case. If inflation falls, so will the interest rate. 6. Nasdaq 100 Index Funds. It is a good choice for equity investors who want to grow and deal with significant volatility. Investors should be able to hold their money for at least 3 to 5 years. Using dollar cost averaging to buy in an index fund trading at all-time highs can help reduce risk, compared to buying in with a lump sum. Like any publicly traded stock, this set of stocks can also move down. While the Nasdaq 100 includes some of the strongest technology companies, these companies are typically among the highest ranked. This high valuation means they are likely to fall quickly during an economic downturn, though they may rise again during an economic recovery. How long can you invest? You can invest for absolutely different periods. You can do it at least for a day, at least for 20 years. You choose period based on your financial goals. But it depends on the term where to invest. If the term is long, the risk is low and the potential return and the effective compound interest are great. For example, bonds are suitable for short-term investments, for a year or 3, and stocks are suitable for long-term investments, 10, 20, 30 years. Anyone can be an investor. A lot of people mistakenly believe that people who already have billions and have experience in business can become investors, but this is not so. Most investors are ordinary people. They go to work, walk with their children and are fond of not only finances. Investing is just another source of income for them and a way to secure a comfortable retirement. The main thing is to start and not be afraid of anything. Where to begin? 1. Estimate the amount you are willing to invest. In theory, you can even start with $2. But does it make sense? You will not be able to compensate for either the commission of an intermediary or the time spent on trading with such money. It is worth starting to invest if you are ready to risk more than $500. It's the only way to make money on it, but you must mentally prepare yourself in advance for a situation in which you will lose all your money. If you understand that this is not a disaster for your budget, you can try. 2. Consider how much time you are ready to spend on investments. If you are ready to spend a lot of time on education, plunge into this topic, study statistics and stock reports in the mornings and at nights, follow the charts during the day, you can try to trade on your own. Then you will need a broker who will become your intermediary to access the exchange. You will make decisions about buying and selling and the broker will carry out your instructions. If you are not ready to spend a lot of time and effort on investing and learning, it is better to consider one of the forms of trust management. In such a system, you make a minimum of decisions, entrusting the investment of your money to professionals. But you must understand that a large percentage will go to the manager. 3. Choose a strategy and assets. Decide what you will invest in. Stick to a certain strategy. 4. Find an intermediary company. When you decide on a strategy, finding a middleman will be easier. The most important thing when choosing a broker is to make sure he has a license. If you have chosen to invest on your own, you have to go through the following plan. 1. Conclude an agreement with a broker. 2. Open and fund a brokerage account. 3. Install a special program for trading. 4. Start buying and selling. If you have chosen the path of trust management, it will be enough to conclude an agreement and transfer the money to the trustee. What shouldn't you do? 1. Don't invest everything that you have in securities. Find money for living and unexpected expenses. Create a safety cushion. Then you can start trading. Invest the amount that you are willing to accept losing. 2. Don't guess. Get trained. Learning all the secrets of investing requires a lot of work and a lot of time. Be sure to study this issue, read books, watch educational videos, read articles and forums, meet and communicate with other investors. Most brokers run courses for beginner investors. And trading programs often have a demo mode. You can try investing without the risk of losing money. 3. Never give in to emotions. If you act impulsively, you can make many mistakes. A novice investor should not react sharply to the slightest price movement on the stock exchange. But you need to act decisively if the price changes significantly. 4. Don't stop at one. It is better to buy securities of companies from different industries. For example, when oil prices fall, the securities of all companies in the oil and gas sector suffer. If you buy securities of companies in various sectors of the economy, such as the chemical industry, engineering, telecommunications, this will help you reduce the risk of losing your money. 5. Do not believe the promise to earn huge amounts per day. Only charlatans can guarantee anything in the stock market. A responsible broker should warn you of the risks. The situation on the exchange is changeable, and only you are responsible for the decisions made. Learn investments, don't make mistakes, be at the top of the food chain. Do not forget to subscribe to this channel.